Corporate finance for international expansion. In today's interconnected global economy, corporate finance plays an essential role in enabling businesses to thrive beyond their domestic borders. As companies seek new markets and opportunities abroad, they must navigate complex financial landscapes that involve currency exchange rates, regulatory compliance, and capital structure optimization. The strategic management of finances is critical when expanding internationally, as it affects everything from investment decisions to risk mitigation strategies. Understanding how to allocate resources effectively across different regions becomes paramount for sustainable growth and profitability. Strategic financial planning for global markets. Before embarking on international expansion, corporations must develop a robust financial plan that aligns with both local and foreign market conditions. This involves forecasting revenue streams, assessing potential risks, and ensuring adequate liquidity to support operations in diverse environments. A well-structured financial strategy helps organizations identify viable entry modes such as joint ventures, acquisitions, or wholly owned subsidiaries while considering factors like political stability, tax implications, and infrastructure readiness. Currency risk management. Implementing hedging techniques like forward contracts can protect against volatile exchange rate fluctuations that may impact profit margins. Tax optimization strategies. Leveraging transfer pricing policies and understanding double taxation agreements can significantly reduce effective tax burdens in multinational settings. Funding options for cross-border operations. Selecting the right funding sources is crucial for sustaining international business activities without compromising long-term financial health. Companies often explore various avenues including retained earnings, debt financing through international loans, and equity investments from overseas partners. Diversifying capital structures allows firms to balance between cost-effective borrowing options and maintaining sufficient shareholder equity, which is particularly important during periods of economic uncertainty or geopolitical instability. Evaluating debt financing alternatives. Banks offering cross-border lending services provide access to substantial funds but typically require collateral security and have stringent credit evaluation processes. Interest rates vary depending on borrower ratings and prevailing macroeconomic indicators affecting global interest rate trends. Alternatively, issuing bonds denominated in foreign currencies might offer favorable terms under certain circumstances. However, this approach exposes issuers to additional currency conversion risks unless properly managed via derivative instruments. Capital budgeting across diverse jurisdictions. When evaluating projects located in multiple countries, accurate capital budgeting requires adjusting for differences in inflation rates, tax regimes, and required returns by investors originating from varied geographical backgrounds. Using discounted cash flow analysis tailored specifically for each region ensures better alignment with actual opportunity costs associated with deploying capital there rather than relying solely on standardized discount rates applicable domestically. Political risk assessment. Incorporating qualitative measures related to government policy changes or trade restrictions enhances predictive accuracy regarding project viability over time horizons exceeding 5 years. Cultural considerations in investment decisions. Recognizing regional preferences influencing consumer behavior patterns aids in refining projected revenues linked to particular initiatives being considered globally. Liquidity management in multinational corporations. Maintaining optimal levels of working capital becomes increasingly challenging when managing operations spread across several continents due to disparities in payment cycles, inventory turnover ratios, and accounts receivable collection. Efficiencies among geographically distinct units. Implementing centralized treasury systems facilitates real-time monitoring of cash flows worldwide, allowing swift adjustments based upon changing demand forecasts or unexpected disruptions impacting supply chains unexpectedly. Cash pooling techniques. Consolidating excess funds held at subsidiary level back towards parent company improves overall utilization efficiency, reducing idle balances unnecessarily tied up locally. Dynamic discounting programs. Offering early settlement incentives encourages faster repayments, improving net operating cycle metrics beneficially impacting short-term solvency positions positively. Risk mitigation frameworks for global enterprises operating internationally exposes corporations to numerous types of risks ranging from fluctuating commodity prices to legal disputes arising out jurisdictions' unfamiliar territory, requiring specialized knowledge base handling them appropriately proactively. Establishing comprehensive risk assessment protocols enables identification, categorization, prioritization, addressing threats systematically before they escalate unmanageable proportions, potentially derailing entire operational frameworks. Established carefully previously. Hedging against foreign exchange volatility. Utilize futures contracts, swaps, options products designed to mitigate adverse movements, pegged currency pairs, relevant transaction exposures, existing portfolios, actively monitored, regularly updated accordingly. Insurance products tailored specifically for overseas exposure. Obtain coverage protecting assets, liabilities against events including expropriation, natural disasters, political upheavals, covering bases comprehensively, safeguarding interests invested heavily abroad. Performance evaluation metrics in multi-country contexts. Traditional performance measurement tools used within single-country confines prove insufficient, measuring true effectiveness achieved through multi-jurisdictional operations, necessitating adoption alternative KPIs reflecting nuanced realities encountered simultaneously across disparate locations. Developing localized benchmarks adjusted according industry standards prevalent respective regions provides clearer picture accomplishments relative peers competing same space despite varying contextual influences shaping outcomes observed reported. Figures generated purely numerical outputs alone. Economic value added. EVA calculates residual income after deducting cost capital employed, demonstrating whether generating profits above minimum return expected shareholders, enhancing value creation process continuously evaluated periodically. Return on invested capital. ROIC measures efficiency utilizing available capital, producing returns, indicating strong management practices, allocating scarce resources, optimally maximizing shareholder wealth, consistently measured, compared sector averages, tracking progress made annually. Compliance and regulatory challenges facing globally active entities navigating labyrinthine web regulations governing financial transactions conducted across boundaries demands meticulous attention, detail, expertise, staying abreast evolving legislative landscape, continually adapting internal controls, procedures ensure adherence, mandatory requirements, imposed authorities overseeing domains involved. Prioritizing transparency reporting obligations mandated international bodies like IFRS GAAP establishes foundation trust credibility vital attracting investment partnerships building lasting relationships stakeholders engaged regular dialogue maintained openly honestly. Data privacy laws. Adhering GDPR CCPA similar legislation protects sensitive information processed clients, suppliers, employees, preventing costly penalties, breach incidents occurring inadvertently, violating strict confidentiality clauses enforced rigorously nowadays. Anti-money laundering protocols. Implement robust KYC checks, AML screening mechanisms, detect suspicious activity, promptly mitigating reputational damage, legal repercussions resulting. Non-compliance exposing organization vulnerabilities, exploited malicious actors seeking exploit weaknesses systemically. Case studies illustrating successful corporate finance practices abroad and examination successful enterprises executing flawless corporate finance strategies reveals common denominators contributing sustained success navigating complexities. Inherent international expansion endeavors undertaken boldly strategically. Companies excelling consistently demonstrate unwavering commitment, thorough preparation, extensive research conducted prior initiating ventures abroad, ensuring every aspect addressed meticulously, preemptively avoiding pitfalls commonly encountered. Less prepared counterparts struggling survive, let alone flourish amidst challenges faced daily now. Apple Incorporated's supply chain financing model. By leveraging its massive purchasing power negotiate favorable terms suppliers globally, creating win-win situations, securing reliable components, timely manner, minimizing disruption, manufacturing schedules, benefiting mutually, strengthening supply chain resilience significantly. Samsung Electronics strategic joint ventures approach. Forming alliances, local entities grants instant access networks, distribution channels otherwise difficult penetrate, organically accelerating time to market, product launches, achieving scale economies, rapidly establishing foothold target regions. efficiently, effectively. Future trends shaping the landscape of corporate finance internationally. Emerging technologies, digital transformation reshaping traditional paradigms governing corporate finance functions, compelling organizations reevaluate approaches utilized. Historically, managing monetary affairs, increasingly dynamic, unpredictable environment characterized rapid change, constant innovation. Adopting AI-driven analytics platforms automates routine tasks, freeing human capital. Focus high-value decision-making processes requiring insight, judgment, discretion. Areas where machines incapable replicating nuanced subtleties. Integral, effective governance models. Thriving future. Blockchain technology enhancing transparency. Implementation. Blockchain solutions streamlines reconciliation processes, reduces fraud instances, increases audit trail visibility, facilitating smoother intercompany transfers, settlements occurring seamlessly across borders instantly. Verifiable, immutable records maintained securely, transparently. Machine learning predictive models. Integration. Machine learning algorithms enhances forecasting capabilities, predicting market shifts, identifying emerging trends, assisting leaders make informed choices proactively rather reactively, responding unforeseen developments threatening core objectives pursued relentlessly. Day-to-day operations. Conclusion. Mastering corporate finance principles becomes imperative for any enterprise aiming establish maintain presence global marketplace successfully. From strategic planning initial stages through execution phases involving intricate facets discussed herein above, professionals equipped requisite skills knowledge remain indispensable force driving organizational success, realizing full potential afforded participation international commerce. Continuous education adaptation mindset essential keeping pace relentless evolution defining modern era capitalism forevermore.